Hey guys, it's BA here, and just wanted to update you on some of the stats I'm keeping for the markets. Now, what this is this is our the stats that I'm keeping real time on those levels I show you every week. So every Monday morning, I go in and plot level 1, level 2 on the upside and the downside for each of the markets. The S&P 500. Which is ES, the ZB of the 30-year Treasury bonds, CL's crude, DX is the dollar, GC is the gold. So what I do is just really interesting to keep those levels because primarily we're option sellers, and we want to know where the odds really stack up in our favor. So what I want to do is just talk about the first levels in the market. So what these stats tell me is that number of weeks I've been doing this in real time is 29 weeks. Now I've got decades worth of this data to back this up, and I can tell you that these statistics here in real time are very, very close to the historical stats that I keep on these markets. But I'll just report on the real-time results. Alright, so what I'm trying to show you here is that each week I plot level 1, level 2. So I'm really interested in the levels in between in between those markets there. So in between level 1, I want to know how many times the market closes inside of level 1, how many times it closes inside of level 2. That's really important for option sellers. So the S&P 500 out of 29 weeks, 93% of the time it stays inside those first levels. That's very important information to know that those levels hold 93% of the time. Bonds are a little bit more volatile. You see here about 69% of the time bonds stay inside those levels. You still make money doing trading against those levels. Crude, 72% of the time it stays in between those first levels. Dollar, 75% of the time. Gold, 69% of the time. You can see gold and the bonds are pretty close. So they stay in between those first levels 68-69% of the time. Anyway guys, that's an update on the levels. Some interesting stuff going forward. How is it interesting? Well, I want to know that I could play, these levels are projected for a week from Monday through Friday. So when we start getting more volatility pumped back into the S&Ps, I want to sell that first level just every week. I don't want to do it right now because we're at all-time highs. There's nothing in the calls to sell from one, no premium, and there's very little premium in the put side right now. When it's, we're in the single digits for the volatility in the S&P. We get back around above anything above 12, and you can play this all week, every week, in and out. And this is playing these levels right here is one of the most consistently profitable strategies I've ever used. So anyway, that's a wrap on the stats for the levels for the week, and this is BA signing out.